Bitcoin is facing a perfect storm.
What are you talking about?
A historic executive order from Trump.
We're going to make a lot of money for the country.
An AI breakthrough in China that's flipping the tech world upside down.
Claims that it built an AI model, it's a tiny fraction of what U.S. companies are spending on artificial intelligence.
And a bombshell move from the SEC that could unleash trillions into the crypto market.
A few big changes at the SEC this week. Late yesterday, it withdrew a controversial accounting rule.
These events are creating chaos.
I can't follow what's going on anymore.
And opportunity.
Tell me more.
So the next big question is, will Bitcoin soar, or are we on the brink of another crash? Let's break it all down.
Let's do it.
Now before we dive in, let me ask you this. What would it take for you to go all in on crypto right now? Drop your thoughts in the comments below, and let's see if this video changes your perspective. Because by the end of this, you'll know exactly what's happening, why it matters, and how to position yourself for the next big move. Okay, let's start with the biggest shift in US crypto policy ever.
Yeah, this is the crypto EO. We're going to be forming an internal working group to make America the world capital in crypto under your leadership.
Last week, Trump signed an executive order that could rewrite the future of digital assets. For years, crypto was treated like the Wild West. Banks wouldn't touch it, regulators sued everyone, and politicians brushed it off as a scam. But this executive order completely flips the script.
There's definitely a buzz around crypto with President Trump.
First, it creates a new working group led by a special advisor for AI and crypto. David Sachs has been named the new crypto czar, and his job? To create clear rules for the crypto market, finally bringing peace between Silicon Valley and Washington. And here's the wild part. The US government could start building a federal digital asset reserve.
President Trump signing an executive order that many believe will clear the way for the creation of a national Bitcoin stockpile.
Just like they have a gold reserve in Fort Knox and a strategic oil reserve, they'd be stockpiling digital assets. Imagine that. If the US owns Bitcoin and possibly other cryptocurrencies, then it's in their best interest for the value to rise, just like gold. The US is in a ton of debt right now, over 36 trillion, and this could be how they plan to start paying it off. Oh, and the controversial CBDC, or central bank digital currency debate, well, that's over. Trump's executive order bans it entirely in the US, protecting financial privacy and independence. But that's not all. Banks used to treat cryptocurrency like toxic waste, refusing to serve companies in the space. Now they're being told to play nice. This opens the door to crypto savings accounts, crypto credit cards, and even loans. Imagine earning 5% interest on your Bitcoin just like a regular savings account.
That would be fantastic.
The potential is here and it's massive, not just for US investors, but the global economy as well. Global crypto leadership, tech innovation, and millions in high-paying jobs could be on the horizon.
Oh, that's a big deal.
And if you thought that was big, just wait till you hear what the Securities and Exchange Commission did next. After the order was signed, they announced the repeal of SAB 121, and this might be the most important move for crypto adoption yet.
It withdrew a controversial accounting rule that some said made institutional crypto adoption more difficult.
And here's why. Banks can now custody cryptocurrencies. Before, this piece of legislation meant that they had to treat it as a liability. This means that for every $1 of Bitcoin they held on behalf of a customer, they had to treat it as lending and offset it by holding cash or other assets. So they had to set aside massive amounts of cash reserves to even store it, making it too risky and expensive. But now, storing things like Bitcoin for customers is as easy as holding stocks or gold. This is a massive green light for players like JP Morgan, BlackRock, Fidelity, Goldman Sachs to all dive into the market on behalf of their customers.
Already, the CEOs of Wall Street's biggest banks are signaling a legitimate interest in expanding their digital offerings.
Think about what this means. Your Bitcoin could soon be FDIC insured. Retirement accounts, 401ks, ISAs, they could all start offering cryptocurrency as an option. And financial advisors can start pushing cryptocurrencies to the boomer generation. This isn't just speculation, this is happening. And the woman behind this repeal was SEC Commissioner Hester Peirce, who spent years fighting for crypto innovation from within the SEC. And now, she's won. But let's not get too comfortable, because here's the plot twist. Bitcoin's recent crash has nothing to do with crypto itself. It's all tied to an AI revolution in China that's shaking up Wall Street. A company called DeepSeek has just built an AI as smart as ChatGPT, but for 95% less cost.
Well, the market's lost in deep thought over DeepSeek's claims that it built an AI model in just a couple of months for less than $6 million. Not a B, million dollars. It's a tiny fraction of what U.S. companies are spending on artificial intelligence build-out.
They did it by ditching Nvidia's expensive computer chips and using cheap gaming chips instead. This breakthrough sent Nvidia stock into freefall, dropping 15% in a number of days. And here's how it affects Bitcoin. When tech stocks crash, investors panic and start selling off everything risky, including Bitcoin. And of course, Bitcoin drives the rest of the crypto market, so all currencies take a hit. It's like a chain reaction. Headlines about demands dropping for GPUs spooked Bitcoin miners, even though Bitcoin doesn't use GPUs. But fear doesn't need facts. Miners sold Bitcoin to hedge, traders got liquidated, and then the price tumbled. I've talked about liquidation cascades previously and how they can affect the market, so if you're interested, you can go and check out that video. So where does this leave us? Well, the bulls and bears are gearing up for a massive battle. On the bullish side, we've got Trump's pro-crypto stance, the SEC's policy shift, and the fact of where we are within the 4-year halving cycle. Combine that with AI-powered tools revolutionising blockchain development, security and trading, and there's real momentum building here. We could be about to see a massive bull run on the horizon. But there are some real risks too. Remember the Mt. Gox fiasco? Well, there's $9 billion set aside to repay people that lost money, and it's ready to be distributed. This payout could trigger a flood of selling. High interest rates are still making traditional investments more attractive than Bitcoin, and if the broader tech sell-off continues to happen, Bitcoin won't be spared. The wildcard? Retail investors. More and more people are starting to clock on to the opportunities in blockchain and cryptocurrency. Trading platforms are becoming easier and easier to use, and if the banks start offering crypto custody, then we could be in for a massive influx of liquidity, especially when the social media hive picks up and people start FOMOing in. So what should you do? If you're a short-term trader, expect wild volatility. Remember that the market can move 15, 20, 30% in a single day. Don't panic at these movements and treat them as opportunities. Use stop losses if needed, diversify your portfolio and don't over leverage. If you're a long-term investor, zoom out. Bitcoin has survived 90% crashes before, and if you believe in its future as a digital gold, or if you believe that blockchain will transform our financial system like I do, then you're in this for the long term. I've spoken about it before. Clearer regulations are coming for the industry, tokenization is coming for the industry, CBDCs are coming, and if you're new to crypto, take this time to learn about the space. Check out my last video on why you should be paying attention to crypto right now. And start small, treat it like a lottery ticket, never invest more than you can afford to lose. The best way to trade without emotion is to use AI to automate your trading strategy. That's why I always talk about Algo. Algo is a free tool that you can use to build, backtest and run automated trading strategies just by talking to an AI chatbot. For example, build me a trading strategy that can take advantage of high volume and volatility in the Bitcoin market while protecting me from the downside risk. The bot will build you a strategy. Review the output, take a look at the backtest results, and keep chatting with the bot until you're happy. For example, make it 4 hourly instead of hourly, or don't buy in a down market. When you're ready, you can connect it to your preferred exchange and let it run. This week has been historic. We're watching governments flip the script and start embracing blockchain technology. They're all jumping on the bandwagon, and they're even now starting to talk about removing capital gains tax for US citizens on US-based cryptocurrencies. This technology isn't going anywhere, and nor is AI. The rules of tech are being rewritten, and the global financial system is evolving in front of our eyes. This is a massive opportunity to invest in the new infrastructure that will underpin the global economy. So will Bitcoin thrive? Maybe in the long run. Will it crash again in the short term? Quite possibly. But one thing's certain, the world is waking up to blockchain and AI's potential. So tell me in the comments below, are you buying the dip or are you waiting it out? Remember to hit the like button if you learned something today, and don't forget to subscribe for more deep dives like this. Stay safe, happy trading, see you next time.